Hello guys and girls, and welcome back to this new video. So today we're gonna learn about trend lines and how we can analyze the market with some nice and clean trend lines. So I will say let's start straight in and let's do this. So first of all, you must learn the basic, guys. So what is even a trend line? So a trend line is a line drawn through a chart to show the trend. In context of trading, trend lines are drawn on price charts to show the trend in the price. Traders use this information to determine whether to buy or sell in the direction of the trend. So trend lines can be used in stock price or Forex currency pairs or cryptocurrency pairs. Trend lines are one of the best known price action indicators to use in technical analysis, guys. So how does a trend line even work? The classic way to draw a trend line is by drawing a straight line connecting a series of swing highs or swing lows. An uptrend line is drawn through the swing lows and a downtrend line is drawn through the swing highs. In that way, the trend line is acting as support to an uptrend or resistance to a downtrend. Trend lines are often referred to dynamic support and resistance, meaning that they move with the price trend. Now, how to draw a trend line, guys? The way you draw a trend line is by starting on the left hand side of the chart and drawing the line towards the right. The rule of thumb is that the trend line must be drawn through at least 3 swings. Now, to draw an uptrend line, you start with the swing low on the left hand side of the chart and connect it to a higher swing low. To draw a downtrend line, you begin with the swing high on the left hand side of the chart and connect it to this lower swing high. Now, how we use the trend line in trading. How do you trade the trend line, guys? The idea of using the trend line is to determine the direction of the price trend. Traders can then to decide with the trend with the idea that the trend will continue or against the trend because they think the trend will reverse. With both strategies, the interpretation of the trend line is the same. While the price is above the uptrend line, the trend is up, which is bullish. While the price is below the downtrend line, the trend is down, which is bearish. So there are 5 key things you always to look out for, alright? Now, the first thing is there even a trend? The second thing is trade line angles. The perfect trend line angle is about 45 degrees, guys. More than 45 degrees means the price is rising too quickly, alright? Number 3 is the number of touches. The more swing points that the trend line goes through, the stronger the trend line is, because it becomes more recognizable to more traders. 4 is zoom out, guys. Remember to zoom out your chart in your trading platform so that you can see the start of the trend you are trying to represent with the trend line. 5 is trade line zones. Trend lines are not exact points. It is rare that the price will perfectly touch the trend line and then reverse. The trend line should consider an area rather than a price point, alright? Understanding this helps with determining your entry price and stop loss. Now I give you 2 strategies that all of the pro traders look out. So I will say we start straight on the trend line bounce, alright? The goal of this strategy is to trade with the trend, okay, that is being supported by the trend line, either buying close to an uptrend line or selling close to a downtrend line. Now there are certain strategy steps right here. So the first one is establish price trend, okay? Is it up, down or sideways? Draw a trend line with at least 3 connection swing points. Now extend the trend line into the future. So now A, wait for the price to touch the trend line in another occasion. B, set your sell limit order or your buy limit order, adjust as price moves, okay? Enter a trade in the direction of the trend with the price has touched the trend line. place your stop loss order under the previous swing low in an uptrend above the previous swing high on a downtrend. Now set a take profit order at least 2 to 1 the size of your stop loss, guys. That's very important. You always need a good RR, okay? So the second strategy is a trend line breakout. The trend line breakout can be used as a form of counter trend line trading, okay? So how can a trend line break be a trend following strategy? That's done by trading the breakout of short-term trend lines in the direction of the bigger trend. So what's now the strategy steps right here? So establish long-term trend. Wait for the price to correct or go against the long-term trend. Draw a trend line for this short-term correction. Wait for the price to break out past this trend line, alright? Now A, buy at the break of the downtrend line or sell at the break of an uptrend line. B, set your stop loss order past the trend line to enter the breakout. Okay, set your stop loss on the other side of the trend line, guys. And 8, set a take profit order, again at least 1 to 2 the size of your stop loss. Now to make it even better, this trendline trading strategy is by trading with confluences, guys. Trendline are a powerful tool, but no one technical indicator or price action traders trading system is perfect, okay? You will always increase your probability of success on the trade by incorporating more than one analysis technique, okay? For example, guys, trend lines with Fibonacci retracements. Now in this example, an opportunity to buy a rising trend line is incorporated by an opportunity to buy at the 61.8 Fibonacci retracement level. So now you can see here that the price makes 3 touches, comes back, retests my trend line, retests the 61.8 Fibonacci level and shoots back upwards. Very important to trade with confluence, guys. Now the second one is trend line with the moving averages. Now you can see here a rising trend line matches the widely watched 200-day moving average right here. You have here again 1 to 3 touches, and always when the market retraces, it retraces in the 200 EMA, guys. On the third touch I enter, I shoot for 1 to 2 and it hits my take profit. Now the last one and one of the most used confluences is trend lines with Japanese candlesticks pattern, guys. So now you can see here a trend line bounces are supported by bullish engulfing candles. You can see here the price comes down, tests this trend line here and shoots up, gives us an engulfing candle right here. Now you can see right here the market shoots down to my trend line and it gives us a Japanese candlestick pattern, which is engulfing. You can enter right away on this engulfing pattern and shoot for 1 to 2, and you can see take profit, get hit. So guys, I would say that's a wrap. So you can see that trend lines are really powerful, but more powerful is it when you use it with confluence. You always want to use more than 2 confluences to go in a trade that you can be confident, alright? So I would say when you want more of trading tutorials or more trading strategies, I would say please hit the subscribe button, hit the like button, and I will see you next time, guys. Bye bye.